hopefully. Okay, welcome everyone. We'll start the session in just a minute or so here. But welcome everyone to our presentation this evening. And there we go. So Shauna is a mentor with North Chicago and Lake County's chapter of SCORE. She's a senior executive with over 30 years of experience in banking and small business. And as a mentor, Shauna helps clients learn how to grow their business and achieve their goals. So Shauna, please start your presentation here and we'll come back for questions at the end of the session. So also, please put your questions into the Q&A. That way we know about them and we will get the questions answered at the end here. So take it away, Shauna.
Great. Thanks for the introduction. John and Angela, thanks for hosting this with the Mount Prospect Library. We are talking today about small business financial reporting. Hopefully everybody's in the right place. That's the first step. I have a lot of content to go through today, and I am not going to read every single slide that I put up here. John gave a perfect introduction. I am a CPA by trade, and I've got a lot of experience in banking and with financials with small businesses, and I am very passionate about helping people understand their financials and the stories that they tell. That's what you need to take away from that. The only thing I want to point out here is that if you want a copy of the actual slides after this presentation, just shoot me an email. My email is at the bottom right. Like John said, a recording will be up soon on our YouTube channel, but feel free to connect with me on LinkedIn and send me an email if you actually want a hard copy of this presentation afterwards. We're going to talk about a lot of things today. I'm going to make some general comments to start with, talk about the why before we go into the how-to. So the importance of understanding your financials, why you want to understand those. Talk a little bit about outsourcing, and then really the meat of the presentation today is going to be on examining the key financial reports. And then at the end, we'll go through a little recap as well as a Q&A. So as John mentioned, feel free to add some questions as we go along, and he will chime in or save them towards the end, whatever is more appropriate, but we do have a lot to get through today. So I already did say I'm not going to read every single slide, but honestly, this is probably the exception to that. I just want to make some general comments before we get into the meat of it. The target audience today would be people who are business owners or key employees or anybody who wants to really understand the business financials, their business financials better and ensure they're making decisions right. I'm assuming that going into this, you have some sort of general idea of what your personal goals are for your business, or you're working towards figuring those out. Those can be anything from a revenue target to a number of customers target to I want to make enough money to save for retirement, or I want to make a ton of money. They can be financial related, they can be non-financial related, and they are very personal. So if you don't know exactly what your goals are, that's fine. That's an assumption that as we go through this, you'll see that kind of thread weave through the whole thing. Also assuming that your records right now are accurate and complete. If they're not, we'll talk quickly about like how to get them there, but really I am not talking about debits and credits and T accounts and journal entries and things like that. We're not talking about the logistics of accounting of your financial records. We're talking about the data is good in there. We're getting some reports. How do we read them? That's what we want to go through. I will talk a little bit about if you're not quite there yet and you need to get your records up to date, where to go for help. The other thing is I'm going to go through a fictional example throughout this presentation. Will be a fictional business that I made up. There are so many different types of businesses. There are LLCs, there are corporations, there are restaurants, there are manufacturers. There's so many different types of businesses that there's no possible way for me to cover off on everything that applies to everybody. But feel free, again, to ask some questions in the Q&A if you've got some specifics that need some clarification, or reach out to me separately, reach out to SCORE separately, and we'll talk through what applies to you. So again, I said I wasn't going to talk about the slides, and I talk about the slides, but we're going to go forward from there and not talk as much. I'm not going to read everything that's on the slides. Why are you doing this? What's the importance of understanding your financials? This is key. If you don't know where you're going, you might wind up someplace else. I love quotes. I love Yogi Berra quotes. And I think this one kind of hits on what we were talking about today. And I mentioned just a few minutes ago that your goals are important. So if you don't know what your goals are, if you don't know where you're at right now and where you're headed, this is going to be challenging. So really it's, the first step is knowing, where you want to go. I've got this great chart that I'm throwing up here. And this is not anything that I think that you're going to be able to pull out of your reports right now. This is not anything that has to do with my example, but I came across this recently, and I think this is just a great example of why you want to take a step back and look at things and look at the story that your financials tell. So this chart is the revenue in the music industry from, if you look at the bottom left of the chart, 1975 roughly to about 2020-ish, are pretty current right now. I can't tell, and maybe somebody can tell me if you can see my mouse when I'm doing this, because if I'm pointing to things thinking you can see them, you might not be able to. But if somebody could let me know that would be great. The point of this chart is to show the story. Oh, perfect. John says you can see my mouse. Point of this chart is to see, the revenue over time within the music industry. And for those of us who, lived these decades, you understand that back in the 70s, vinyl was big with 8-track kind of trending down. In the 80s, cassettes, made up the revenue base basically of the music industry, then transitioned to CDs. And now we're into that streaming section. Why am I bringing this up? It's interesting, but also because this is the story of revenues in the music industry. I do not think that most of you on this call probably don't have decades worth of information about your business in particular, but you can take a look at this and understand the story that it tells. It's interesting when I look at this and I look at, the 1999 timeframe when CD were probably at their height of revenue. My guess, having worked in big corporate arenas for many years, my guess is that at this time, the conversations were about how, next year we're going to do 10% more, and the next year we're going to do 10% more, and they trended things up this way. And obviously that's not what happened. So one of the things I want to point out here is you in a small business, you in your business, you in your industry, as you look at things and see trends, you not only have to look at your prior financials, you have to look at what you're seeing here. If I owned a CD store, a music store in the late 90s, I might have seen fewer and fewer students, coming in after school to buy CDs. I might have seen articles in Rolling Stone magazine, things like that. So really, the financials are one piece of the story, but your gut instinct and your feelings about your industry are important as well. So big picture, why you're looking at your financials. So outsourcing, let's talk quickly about that. Personally and professionally, I think that everybody should focus on what they do the best and hire other people to do those things that they don't do well. I don't think I need to really hone this point in for many people. Outsourcing saves you time. It saves you, you're hiring an expert, you get the best. You can spend your time on the things that you do better, running your business, building your business and whatnot. But I will say you absolutely have to understand your financial reports. If you outsource everything, that's great. If that works for you, that's great. But ultimately, you have to understand your financials at a high level at least. You cannot outsource that ultimate responsibility. I like to think of this and give you one quick example here. I love looking at financials. As we get into them, I'll kind of geek out a little bit. I would say though that to kind of put this in a parallel example, I am horrible at anything medical related. So if I hate shots, I hate going to the doctor, I tense up with all of that type of information, all of that, or that arena. But if you need an advocate to go with you to the doctor, I'm the best person to bring with you, because I am the person asking all of the questions. I understand the fact that this is not my go-to. I understand the fact that I don't understand the science. I understand my limitations. I will ask the questions, ask them in different ways, ask them, over from a different perspective, ask what to look for, ask what the warning signs are. I want you to take that same approach with your financials. Hire somebody if you can, or at least take that, that attitude of, I need to ask a lot of questions of the people that are supporting me, or the people who know more than me. Who should you hire? Just real briefly, again, this is one of those slides that if you want a copy of it, just let me know. But accountants can take many different forms. Sometimes they're CPAs. A CPA is somebody who has passed, a certified public accountant, somebody who's passed exams, somebody who has ethical requirements that they're required to uphold, as well as continuing professional education. A bookkeeper, a tax expert, and an accountant or auditor are kind of the three main categories of accountants out there. I'm probably doing my folks a disservice by simplifying this, but really this is, for you, from your perspective, this is what you need to know. Bookkeeper is kind of the, you might do this yourself, you might hire somebody to do this, but it's the person who actually, gets the information into your accounting system, or it's the person who balances your checkbook. They can communicate things to you. They do the basic grunt work, for lack of a better term, on that. May or may not be a CPA. They are the least expensive of this, and they fill one piece of what you potentially need. Again, you could do this yourself. You could have somebody in-house that does it, or you could hire somebody to do that. Tax expert, huge fan of outsourcing this. None of us, I would gather, on this call are looking at our tax experts in their day-to-day job. Quite frankly, today is the due date for business returns. So nobody on this call should be a tax expert, because you're busy with other stuff. The important thing to note here, though, is, they've got the experience, they've got that hand in it. They do it 24/7, basically. Use that expertise to your benefit. A, it can save you money in the long run if you were to encounter a problem because you did something incorrectly. B, they could probably save you money because they know of things more than you do, as far as deductions and things that you can properly account for in your tax returns. But I will say this, and I'll say this probably again, you sign that tax return. So you, again, at a high level, need to understand what's on that tax return. Even if you hire somebody to do it, you have to understand it. And then accountants and auditors, again, all of these people may be the same person. They could be different people. They could be part you and part somebody else. Just something to know overall on some distinctions there. One question I get quite frequently is, how do I find somebody? How do I find a good bookkeeper or tax accountant or auditor or whatnot? Not going to read you this, but really just check with your buddies, check with your friends, acquaintances, people in similar industries, ask for personal references. I would encourage you to ask some of these questions, but most in particular, my two favorite questions are, what experience do you have in my industry? Do you work with LLCs? Do you work with people in the service industry? And then make sure your communication style is very similar to what their communication style is. If I like to talk a lot, will they talk, or will they be emailing me? Are they open to me asking questions? Are they, patient and kind? Whatever style you need, and that varies from person to person, but all good questions to ask there. Another quick one, just accounting software. Quickbooks is the gold standard. They're excellent at what they do. They've done it a long time. There's integrations of payroll and invoicing and HR and all sorts of things there. If that's not something that works for you, and that's not something that works for your budget at this point in time, Wave is also an awesome tool. I've used it just a tiny bit, but I'm pretty impressed with it. And I've heard other people say very good things about it. It's a free tool. Xero is another low cost, good functionality product. And quite frankly, depending on your business, if it's, very simple and you don't need the complication of an actual accounting system, Excel might be the tool that you need. But at some point, pretty much everybody will outgrow Excel. So, keep that in mind. There's a link here for an article about that if you want to look at that in more detail. But going back to one of my initial thoughts or comments, if your books are not in order, some of what we're going to talk to won't make sense. You can run a report out of QuickBooks, and QuickBooks could be the gold standard, but if the data isn't correct in there, it's really not going to be helpful. So that is the key, first step is getting your data good. Key financial reports. So we're going to spend a bunch of time on this. So buckle up. What we're going to talk about today is the income statement, balance sheet, and cash flow. Those are the three main reports that when everybody talks about financials, that's really the reports that I'm talking about. Talk a little bit about accounts receivable aging and accounts payable aging. And then I've got a few other reports or comments I want to make about different metrics to keep an eye on. So it's a lot. So bear with me here. I've made up this company, RFG Photo Managers. All of my examples here are hypothetical, but I wanted to kind of run through an example with an actual business here, a hypothetical business, I guess you would say. In this business, this is a photo management business. I don't know if you're aware that this is actually a thing. I've recently, personally, been trying to digitize all of my photos in memorabilia because I've got things going back decades that I'd like to save in a digital format. So as I was researching that, I came across the fact that this is actually a business out there, photo managers. These people do this for a living. And so as we go through these examples, my business does three things. My hypothetical business actually works with clients to do it for them. So I hypothetically would take all of your photos and scan them and digitize them and provide that to you. So that's a service. I also create webinars. So if you are more of a DIYer and you want to do this yourself, I've got webinars that you can purchase that will walk you through the steps that you need to do. And so that's one revenue stream for me. And then the third revenue stream for me, a very minor piece of it, is I do have some actual physical binders that I will send to people with information on that as well. So I've got the service that I provide where I do it for you. I've got the DIY webinars, and then I've got my binders. So very small piece of my company here. But my point here is that, I said earlier that everybody's got a different situation, different things that will show on their financials based on the type of business. If you're in a food business, you're going to have, way different revenue streams than I am. So just bear with me on some of these examples and think about how this might relate to what you see in your own business. So income statements. So I'm sure you've all heard of this income statement. It's also known as the profit and loss or P&L. If you ever see any of these three terms, they basically mean the same thing. They are the same report. So don't be scared by the terminology there. It's an accounting record of how much money you made. And it's important to note that the income statement here is not the same as the cash flow. So in this, we'll talk through this in a second, but I'm looking here at the quarter ended 12/31/2021 for my fictitious company, the RFG Photo Managers. And for the fourth quarter, you can see that just look at the bottom line here, my net profit was $8,324. That is not going to be my cash flow. My cash flow will be different than that. It is not going to be what is recorded on my tax return. Tax return is slightly different than that. There are nuances to that for tax purposes as opposed to your books. So I want to just be abundantly clear on those because I know that can be a little confusing. So let's talk through this. And what I want you to consider for your own company, for your own example, when you go back and try to look at this and apply this to your company, I want you to start at a high level and then drill down to a lower level. Always start at the high level and make sure you understand that, and then start drilling down to a lower level so you can understand the pieces. In my experience, it doesn't really help to look at the bottom level and try to, it just confuses things. So as we're looking at this, again, the quarter ended 12/31/2021. You can see that let me see if I can actually write on this maybe a little bit. Give me a second here. It's not what I wanted, but we're getting close. So you can see that here, my revenues were 18,500. That was a combination of those three areas that I earn money. And we'll talk more about that in a minute. My cost of goods sold. So the cost of what it takes me to produce those binders I talked about is $1,100, which makes my gross margin $17,400. That's basically how much revenue I'm bringing in. My operating expenses, $5,675. And then my income before other expenses, sometimes called EBITDA. It's a fancy, crazy name. Earnings before interest, taxes, depreciation, and amortization. You don't really need to know it. Don't be scared if you see it, though. It's just a term there. But my income before other expenses is $8,725. I've got some other expenses of $401. So that gives me that $83.24. In my example here, I did not include income taxes. You all know what those are. So $83.24 is what I earned here. A few things to note. We'll come back to all of these. We're going to drill down in this and look at this in more detail. Always good to know the breakout kind of month by month. So I've shown you the 3 months. It's key to see here that, some months are more profitable than other months. And the reason typically is revenue. Sometimes it's expenses though. So really looking at this and understanding it month by month will be key. I've got a note here, and I have not, trying not to overcomplicate this, but some of the more important things to know other than this when you're looking at an income statement is, how did this quarter compare to last year, fourth quarter? A lot of us have seasonality in our business. So a fourth quarter, a first quarter aren't necessarily very comparable. But you can, if you've got all your information in a system like QuickBooks or Wave or whatnot, it's very easy to run a report that shows you, quarter over quarter, year over year, or monthly, or percentage of totals. So those are all more complicated things that you can get into. Definitely very helpful, but I just wanted to start out with, dollars. So here's what we've got here. So kind of keep these in your mind as we go through here. We've got the 17.4 as our gross margin. We're going to drill down. Let's say we understand this. Oops, I've got to clear and then go back to a mouse. There we go. So in the revenue, so that 17.4 that we just talked about, this is where I'm talking about, start at a high level, understand that that's your revenue number, and then let's go lower than that. Here are those 3 lines of business that I talked to you about. I've got my consulting revenue, my class revenue, my tutorial revenue, and then my workbooks. And here's how much money I made on each of those. This is completely, this is very important to understand. For my business in particular, my consulting revenue, and for most people with consulting revenue, is very time-based. There's only so many hours in my day. There's only so many things that I can, hours I can book. I can't make much more money. There's an upper limit to that. On this class and tutorial revenue, there's no upper limits. I can have one person or 1,000 people buy a webinar for me, and I've got potential there, a lot more upward potential there. And kind of workbooks are kind of in between. Cost of goods sold. Cost of goods sold would be the cost associated with anything that I'm selling. So not my rent. Talking about literally the cost of something that I'm reselling, something that I'm turning into something else or reselling in some format. So for me, that's the workbook costs and the binder costs. So, this $1,100 goes into that's the cost of producing these workbooks that I then resell. So on the revenue side, that's an example of how we drill down one more level. On the expense side, let's do something similar then. And this is a lot more lines, but probably also a lot more understandable, or a lot of people have probably see this and understand it a little bit more. All of these expenses, that 5675, let me find my drawing tool again, in a second. 5675 is my expense for the quarter on all of these things, whether it's payroll's that's actually a subtotal that we could drill down on. That would be salaries and health insurance. And if I offer 401k, it would be that, payroll taxes, things like that. Operating expenses would be, these are some good examples here. So I've got some advertising expense or some 1099 contractors that are not payroll related. Insurance that is not health insurance related, things like that, office expense, rent, those types of things. So in my company here, that's 5675. And like we talked earlier, it's good to know kind of the monthly breakout of that as well, because there is seasonality of that. You, in theory, do not have legal expenses all of the time. And you have some licenses, for example, that are once a year. So it's good to know and good to think about these, the timing of this, the monthly breakout of this. The other expenses that we talked about earlier, the 401, those are outside of kind of the day-to-day things. Those are interest expense. So my credit card debt, I've got the interest portion of my expense. This is not my total payment. This is just the interest piece of that. That's good to note. That'll come up again. Same thing for another loan that I have in this fictitious example. And then bad debt expense. Bad debt is, unfortunately, you have some customers that don't end up paying you. So that's another other expense. And then we're down to this 8324 again. So again, we started at the high level and then we drilled down to kind of understand what was going on a little bit more. So the next report that we're going to look at is the balance sheet. So the income statement shows the money that we made. The balance sheet is a summary of what we own, what we owe, and our book value. In my simple company here, this is pretty simple. We have our assets, what we own, and I've got 17,024. I've got a piece of this that is cash. That's 7,024 in cash. I have $2,500 in accounts receivable. I've got some equipment. I bought some scanning equipment. I've got some, a computer, things like that. That's a total of what I own. The liabilities here, what I owe. So I owe somebody, I have accounts payable of about $200. I have a credit card balance of $1,000 and another bank loan of about $7,500. And that's what I owe. So the net of those two is the retained earnings. And then we have the balance. So balance sheet balances, ideally, it always should. So that 17,024 in assets between the liabilities and equity, that's 17,024. So again, very important to understand this at a high level for yourself and for your company. And then to drill down to the next level. Now, this is a simple example. I don't have everything that I have is on that first page, but I wanted to show you a couple of things with zeros on them just to give you an example of what else might be in an assets. If I had a big inventory, if I had a lot of stock of things that I was reselling, that would be in here. If I prepaid some expenses, so I paid a bill this year that actually was for multiple years, it's called a prepaid expense, and that would be in here, and that would make up what's called current assets. And current assets are essentially things that are easily converted to cash. And then the other part of assets would be fixed assets, and those would be the things that are really not easily converted to cash. So I've got real estate. If I owned a building, or if I'd made improvements in that building, the equipment that I had is in this category as well, and furniture and vehicles and things like that. So these are the two categories within the assets, again, for that 17,024, just like we saw it on the page before. It's a very high level. This is more of a breakout with, again, in my example, not much. So similarly, let's look at the liabilities and equity. Again, you won't learn anything more from this about my company because I don't have any more details here. I don't have anything else. But in liabilities, if you did have other loans, if you did have maybe had a vehicle loan, or you had a line of credit balance and whatnot, you would show it here in your liability. These are things that you owe, so that would be listed here. And again, this is the balance that you owe, not the interest on that, just the actual balance. So that's where my $1,000 is on my credit card. And then the equity section, this is a little bit more of a breakout. In my simple example here, it's all in retained earnings. But if you were to take an owner distribution, this is where you would see that. If you were to add money into the company, you would infuse money into the company or take money out. That's where this would show in this equity section. And then again, the balance sheet balance is 17,024. So probably, I would say the balance sheet is probably the easiest one to understand. Getting a little bit more complicated, and probably not rightfully so, is cash flow. And cash flow, we all know what cash flow is in theory. Cash flow is money coming in, money going out. It's actually cash flowing in and out of your bank account or whatever accounts that you've got, actual physical cash, or a record of cash in your bank account. There's a little nuance here that I want to explain a little bit. Accounting cash flow is a very specific accounting report. If you have QuickBooks, for example, or another accounting system, you run a cash flow report, it's going to look something similar to this. And basically, if you remember from our balance sheet that we looked at earlier, you will remember that our balance at the end of 12/31/2021 was 7,024. And what this report will say is, at the beginning of that time period, what was your balance? What happened to cash, and then what was your ending balance? So it's very helpful from that perspective. From an accounting cash flow perspective, there are three categories. Well, first there's the cash inflow. So any cash you brought into your company. If you remember on my income statement, I made $18,500. However, it was $16,000 in cash, and I had some accounts receivable, not cash. It's a promise of future cash, but it's not cash. So that's why that's not recorded here. But from an accounting cash flow standpoint, there are three categories: investing, operating, and financing activities for outflows. Super important, super helpful report. It just, it does not capture everything I think you need to know. So I just want to go over it and then move on to what I think is a little bit more important. The investing activities are things that, like, you purchase some new assets, you added to your inventory, your cost of goods sold also goes in this. This is all things you're investing into the company. Your operating activities are those expenses. So if you remember on our income statement, we had that $5,675 in operating expenses and the $3,000 in payroll. Those are all my day-to-day operating activities. And the financing activities have to do with loans, loan payments, and owners' distributions, and line of credits, things like that. So any cash outflow that you had to do with financing your business. Again, super important report. But when I think of cash flow, I think of something a little bit different. But I just want you to understand that if you were to run a cash flow report out of your system, this is what it would look like. Or if you have audited financials, this is what they would put together for you. And this is also something, if you're requesting a loan, that definitely they look to for information about how you're spending your money. Seasonality is also something good to look at. So this report is exactly the same as the prior page. You see the 7,024 at the bottom, and you can see same thing. This is exactly the same. I've just broken this out into the months. So you can see that in October, I started at 5,125, just like here. In December, I ended at 7,024. Always helpful to show months. It's going to overcomplicate things for us today, but I like that monthly breakout because you can definitely see how things are moving from month to month, because not every month is the same. What I will say is cash flow, another way to look at this, which is not a true accounting proper cash flow, is to really, same thing, you're looking at how you're spending your cash. You are looking at, I started at 5,125, I ended at 7,024. I took in $16,000. Really the difference in this format is just how you're lining up, how you're spending the money. So instead of saying that $5,000 and the $3,000 for payroll, I'm giving more detail, because I think from my perspective, from something I'd like you to consider is that what's important from a cash flow standpoint isn't so much where you are today, it's where you're going. And forecasting that out will be super helpful. So cash flow can make or break a company, quite frankly. So if you run out of cash and don't have any funding sources, you can potentially go out of business. So understanding your inflows and outflows of cash will be super helpful, and being able to forecast those out into the future will be helpful. And forecasting them out into the future in this format is, in my mind, way more helpful than the other format, but that's a personal preference too. Now, I know we've got a lot more to go over, and I unfortunately am being long-winded, it seems like, but I'm to try to get through some of these things a little quickly here. Accounts receivable aging summary. So if you have your information in an accounting software like Quickbooks, and you can automate a report to send it to you once a week, every Monday morning, do it. And this is a good one to do. And the reason for that is, if you remember from our balance sheet, we had $2,500 showed up on our balance sheet as our accounts receivable, which means customers owe us this money. The aging summary will be as of a point in time, and it will break things out as to how long you've been waiting for this. So not so concerned about these. They're relatively current. I'm a little worried about this customer here. I'm super worried about this customer here. Customer F, they've owed me money for more than 3 months. So you can have something on your books like this and have it be, look, okay, I'm supposed to get that $750, but in reality, you have to follow up on things like that. So this report, if you've got the information in the system, if you're running the invoices through the system, this is a great report to look at regularly. There is a similar report. I don't have a copy in here because it's really basically the same on the accounts payable side. And again, it assumes that you've got that loaded into your system, and then that's a report that will show you money that you owe based on the time that it's been outstanding. I wanted to give some resources. Again, if you want a copy of these, just shoot me an email. I'll send you this, and these are some links out there. The reports that we're talking about are basically run out of a system. So that's a better way to go. But if you are just starting out and wanting to create these in Excel, there are lots of templates on the SCORE website that you can go through, and that SCORE Mentor can help you with. These are some links to some of those. I know we've got a few minutes left, so I'm going to keep going here. A lot of other things I wanted to talk about, though: forecasting, KPIs, break-even points, business plan, tax returns. Just real quickly, I'm going to run through all of these. Forecasting, I talked about when we were talking about the cash flow. Forecast, in my mind, is one of the most important things that you can do, and a business plan kind of incorporates this as well. A forecast is an estimate of your future financial outcome. So what am I gonna, what does my income statement look like in the future potentially? What is my cash flow in the future? It allows you to plan for seasonality, and allows you to make changes, plan for changes in market trends. So as we talked about the music industry, being able to kind of say, oh, what would happen if, people stopped buying CDs and started, went back to vinyl, because we've seen that happen too. So forecast allows you to run some scenarios on what potentially would happen and what that would mean for your business. It allows you to take a look at it, to think about it, and to react to it better. I am a huge fan of forecasting. KPIs, also super important, key performance indicators. These vary by industry. You can Google for your industry, what are KPIs for my industry, and they are very personal too. So these are financial, they're non-financial. They're just a point in time, and allow you to kind of look at where you stand versus what your goal was. So for example, my fictional company, I wanted to look at quarterly revenue. I had a goal. This stands for better or worse. I know that's not a common thing, so I apologize for that, but better or worse. So my revenue was $1,500 less than I had wanted. I wanted to track number of clients, number of new clients, number of webinars I've sold. So I can see that I've sold 3 more webinars than I had predicted. I've launched 2 less, but I've got 2 in hopper, so that's good. Client satisfaction, blog post visits. I want to drive people to my blog, and I'm successful. I have been successful in that. So these are all metrics, and they again are very specific to you and your industry, but they are all good things to keep track of because they keep you kind of accountable and focused on those things that are important to you. Break-even analysis. This is just the point where your revenue equals your expenses, above which you make income. So this can get very detailed as well, but basically that's what it is. And that is a good thing to know, especially if you are considering, let's say, hiring a bookkeeper. And you want to know, like, okay, a bookkeeper is going to cost me, I don't know, $500 a month. And basically that means for me personally, I need 1 more client. Is it worth it for me to spend my time and energy getting 1 more client and trusting somebody to do that other piece of it? Absolutely. That's the scenario that you would have to go through. That's the break-even analysis. And you would do that on products as well. Score as many templates on business plans. At this point, you've probably already created a business plan, started your business, are working on it, but there are definitely those out there many out there that if you want to go through that again, that's great. It's financial, but it's also a lot of non-financial things. It's competitor analysis. It's what's the marketplace look like? All sorts of great things to think about. So even if you are an established business, it might make sense to go back and look at that and just make sure you understand those nuances. This is typically something that if you are ever going to go to a bank or seek lending somewhere, they typically want to see your business plan. So that's good to know. Tax returns, we talked about this already. You sign it, you're ultimately responsible for it. Make sure you know what's in there. Ask questions again in a different way. Make sure you understand it. You are responsible. So that went quickly for me. Hopefully that was helpful for you. But here is basically what we've gone over today. You have ultimate responsibility for your financials, whether you outsource them or whether you do them all yourself. Please understand what they mean, the story that you're telling you, the trends that are happening, the seasonality that's happening, where you're headed. They're all telling a story. So make sure you understand that. And to the extent that you can or want to, use the experts to support you. Use somebody who is comfortable and familiar and can do all of that stuff. Use them to support you in what you're, so you can focus more on the business aspect of things. We talked a lot about understanding things at a very high level and then digging down. Super important in my mind, that works best for me personally. Just understand it at a high level and then seek more information. Ask questions. John mentioned it at the beginning. I've mentioned it a couple of times. SCORE is there to help you. Angela mentioned too, the libraries all have business resource librarians. Seek out help from somebody. You're not in this alone. It may seem like it, but certainly there are many options. And again, I've mentioned it 5 times probably. So if you want a copy of today's presentation, the video will be up on our YouTube site, and John will give you information about that, or send me an email and I'll make sure you can get a copy of the printout from that. So I'm going to take a breath here because I don't think I've taken a breath yet. John, did you have any questions come through or anything that we want to
Yeah, we
through?
actually have a fair amount of questions here, but one that is, I think, the most critical is, if you don't have any profits, do you still need to file business taxes today?
Yes.
Yeah.
You won't owe any money, but you definitely still have to file a return.
Or you can file an extension, but if you file an extension and you owe taxes, you should pay them today.
Yeah, I'm sorry. You're correct. I did mention today was the business filing. If you're an LLC though, and that's on your personal return, at April 15th is that deadline. But today, if it's a corporation, you've got a separate legal entity, today's the deadline, but you also can, like John mentioned, file an extension for that. And if you think you're going to owe money, you need to pay it. an estimate of it at least. Otherwise, you potentially could have a penalties and fees. But if you don't think if it's a loss and you don't think you're going to owe any money, you've already paid estimated taxes and you think that's sufficient, then you don't need to pay anything right now. You just need to file that extension.
So here's a couple of questions. One is, can you give a business loan to your company from your personal checking account?
It's basically a capital infusion. You can make it a loan if that is something that you want to do, a document, and I would check with probably your accountant, maybe just to make sure that everything's up and running. But you can do it two ways. You can actually put money into the company, just open-ended, or you can make it a loan situation where you're receiving payments and or interest back. Those are both technically possible. Yes.
So another question here is, can you migrate easily from QuickBooks if you are emerging growth? In other words, if you're over 10 million in revenue.
Can you, I'm sorry, I'm not understanding the question. Can you migrate?
Yeah, what they're asking is that if you're on QuickBooks and all of a sudden your company gets large, can you migrate from QuickBooks to something else? And
it's always possible, for sure, definitely. For something that large, you would probably, whatever you were migrating to, they would have a process and some people to help you with that.
Yeah, you would, I would think if you have a $10 million business, you might want to have a few accountants in your company to handle that sort of stuff, or engage an accounting company here. Question, is it common to show tax on P&L?
Depends again on the type of organization typically. So like a C corporation, you definitely would show the taxes on there. I didn't go into taxes just because it's, one more complication on this, but I could technically have put taxes on here. It's an LLC. The taxes actually are part of your personal return, so you wouldn't really show them on that. So yes and no. There's no right answer or wrong answer, but typically an income statement has a tax line on it, and whether or not that applies to your business is the question.
Okay. So here's another question. Do you encourage separating cost of goods sold between direct costs using materials and labor and other, typically capacity costs for building and equipment? So direct costs versus capacity costs.
So two things. One, I'm always a fan of breaking out things that make sense to you. So if it will help you in the future, either understand it better, report it better, make decisions better, break it out. That's definitely the right way to go. Like in my example, I had the 3 revenue streams that made sense for me. So even if it's not a standard QuickBooks, line, I would add, there's always the ability to add a line there. So I would definitely say that. And for cost of goods sold, definitely, again, if it makes sense for you to have separate pieces to that, I would just be a little cautious on that specific example, because the cost of goods sold wouldn't include necessarily all things related to, it would be the things that you purchased to resell or to use to create something to resell. And so that can be a little bit of a nuance there.
So in other words, the labor involved in creating those goods could be in cost of goods sold or not.
I probably not, but that's a very specific nuance that, based on the specific question. But typically it's just in my case, like the paper or the binders I used, or if you were a food manufacturer, it'd be the flour and the sugar you bought or things like that. There could be an example where that wouldn't be the case.
Yeah, and this is where we remind people that SCORE mentors are here to provide advice and information, and specific questions like this should best be directed to your accountant.
Definitely. And clearly in, 45 minutes or under an hour, I cannot, hit up on all of the specific examples, and it's hard to sometimes answer questions generically without all of the details, but either your accountant, if appropriate, or, SCORE mentor, if you need some general guidance. Those are 2 good options.
So another question here is, are the financial reporting that you've done here, is that pulled out of QuickBooks or Wave or Excel, or how were those done?
This one actually was an Excel spreadsheet that I did. I wanted to use QuickBooks because that would be easier, but I didn't have, since it was a fictional company, I didn't have like the effort required to put something in there and pull out some reports. Was a lot easier for me to do it in Excel. But QuickBooks would have, or Wave, or Xero, or any of those would have very, very similar reports. They may format wise look a little different, but every system would have a high level. Like I was just looking at Wave the other day. You pulled up an income statement and then you say, I want to show more details. And then you would go down to the next level. So they all work very similarly.
So another question was, can you deduct, if you have a home-based business, can you deduct your groceries as a business expense?
I think that's a stretch, but this is the part where you definitely need to consult with a tax advisor. I'm a CPA by trade and I understand financials. I have somebody else do my taxes. They are a little more complicated than just a 1040 EZ, but I am not living in the tax world. So the tax laws change regularly, especially the last couple of years. And in any, political year, big political year, they tend to change a lot. I would definitely, and my guidance to people usually is put it out there. Ask your tax person, the worst that could happen is they say no, but if you think you've got a justifiable reason for that, I would add that expense. I would give it to them and I would explain it to them and have them come back and say no, as opposed to, me trying to make a decision on that. Trust those tax advisors. They work so hard, especially this time of year, and they know those nuances.
That's correct. Always go for your professional advisors on these things here. Let's see. Question: in the beginning years of having an LLC, profits under $100, is it normal not to pay tax on that? I have an accountant that has been the case, but curious on your thoughts here. So if I understand, if you have an LLC, the LLC does not pay tax.
The LLC does not pay tax by itself. It flows through to your personal income tax return. Again, there's nuances to that, but in general, and then it gets combined with everything that you separate schedule, but it gets combined with everything else. So if I had W-2 earnings and an LLC that earned $100, I would still have a schedule on my tax return showing that company and the $100. It would get commingled with my W-2 earnings and, probably not pay anything additional because of it, especially because it was so minor, but you were not paying taxes under any ID other than your social security number for an LLC in general. There's nuances to that.
So let me see here. I think we're kind of at the end of our time here. So thanks everyone for attending. And it sounds like there's, again, a lot of specific questions. And so it is tax time, so that's obvious. There are SCORE webinars specifically on taxes. And so I encourage you to look at our SCORE website, which is northchicago.score.org. And Shauna, if you want to put the next slide up here, we'll show our upcoming webinars are Supercharge Your Website with Search Engine Optimization on April 28th, How to Choose and Buy the Right Franchise on May 17th, and then Cybersecurity 101 for Small Businesses on June 2nd here. So this is our website, and then you want to throw up the mentor slide again so that people can take a picture of that if they're looking for a mentor. And we encourage you to find a mentor at SCORE because we have a lot of experience. Most of us have started businesses or operated businesses or owned businesses or failed in businesses in some cases. So we are able to give you the the advantage of some decent insights here. And again, we thank you for joining us this evening. And this will be available on our YouTube channel, which you can get to by going to our website. And again, we thank everyone for joining. It's been very interesting. A lot of good stuff here. So, Shauna, any last remarks?
All right. No, thanks everybody for joining in today. I know it's a heavy topic and late in the day. So I appreciate your attention, and thanks again. If you have any questions, just reach out to us like John mentioned.
All right. Thanks a lot for everyone for attending, and we will see you at the next SCORE webinar here.